If you're an investor stuck in a high-priced real estate market, then this video is for you. I've been reworking my investment philosophy recently because my market is nearly uninvestable for the projects that are in my wheelhouse. So I'm in a high-priced market in Boston, and it's becoming increasingly clear to me just how unaffordable it is for the average home buyer and in turn for the average investor. Now, with the current state of the market being basically at a stalemate, meaning high mortgage rates, low inventory, extremely low transaction volume, there's absolutely some pent-up demand for housing, and I'm starting to think that the popular tactic of just waiting it out for the market to become more favorable is wearing thin for all types of home buyers. So I'll walk you through my shifting philosophy, and at the end, I'm going to reveal a market I found for great cash flow and hopefully teach you how to identify some of your own. So I'm starting to really think about what the outlet might be for this pent-up demand if the market continues as is for the foreseeable future, which chances are it will. And I see all the headlines about mass migrations to Florida, the Sun Belt, Rust Belt, and I know that there's a lot of truth to that, but my belief as an investor is that you have a massive competitive advantage by investing in your own backyard or general geographic location. So I prefer to stay within a few hours drive of Boston. While I acknowledge those national migration patterns, I'm not the type of investor speculating on markets throughout the country. And I'm okay with that because I know there's a huge segment of buyers who don't want to have to go to Illinois or Florida from Boston to afford a house. They're rooted here, whether it's for work, family, schools, kids, like you name it. There's a ton of reasons people don't want to relocate long distance, but still are desperate to buy a house. And I feel that as the reality sets in that these mortgage rates may be here to stay. Even though there's likely rate cuts coming, there's a lot of economists predicting that mortgage rates will be in the sixes as long as the economy stays relatively strong. And they're currently in the sixes, so it's not much of a change. So this waiting game for rates to drop, it's just becoming more and more of a pipe dream. Like, people are eventually going to take action. And it makes sense that a lot of them will have to push out of these high-priced markets to secondary or even tertiary markets to find affordability. I have some proof of this theory because according to Redfin, as you can see here, the top destination for people leaving Boston is Portland, Maine, which is only about an hour and a half from the city. And being an investor in New England specifically, I know Portland fairly well. I also know there's a lot of investing activity up there and housing prices are fairly expensive. So it's not a market I'm actively looking at, but this migration does tell me that people from Boston are seeking alternatives somewhat close to home, which gives me confidence that there's some under the radar markets with some value that may be undiscovered or maybe just too small to be on the map. And I think I may have found one of them, but there's definitely a lot more out there. If this video goes viral, which I doubt it will based on my other videos, I may be shooting myself in the foot here, but I'm finding a good amount of value in a town called Littleton, New Hampshire, which is about 2 hours north of Boston. And I know it really well because I actually own a property there that I bought to Airbnb. But now I'm realizing that long-term rentals are actually the best use for it from a management and profit standpoint. So full disclosure, I bought it for a short-term rental because it's right in the White Mountains with 3-season tourism demand. But I always underwrite short-term rental investments for long-term rental returns as a backup. Lo and behold, 2 years after I bought it, Airbnb falls off a cliff. You can hear my thoughts on that in this video if you want to hear a good rant. So mid or long-term rentals are my fallback option. I've been renting for about a year now and demand is just super strong. Like, I'm able to rent and re-rent places with no issue. I have a 6-bed, 3-bath, 2 studios without full kitchens, and a 2-bedroom, 1-bath cottage. And all have been rented without difficulty. So it shows there's also demand for like different apartment sizes and different group sizes in that area. So my investment strategy with this property has totally changed from short-term rental to a long-term rental opportunity. And I start to wonder, like, why is this market so strong? And can I identify anything here that might be going on in other smallish towns around New England? So number one is population growth, which I always look for in areas I invest in. Luckily for me, most of New England is growing, some parts slower than others, but in general, there's an increasing population trend. And it's no different in Littleton. As you can see here from the US Census, population has been increasing every decade. That isn't much of a surprise to me, but when you spend some time around Littleton, it's clear that there just hasn't been much construction. In fact, the one major development, which you can see here, it's still only partially complete and has 50 plus units, all leased with a waiting list. And these units are all higher end for the area with higher than average rent rates. Furthermore, when I search Zillow for current rentals, this is what I get. Yeah, it's not very impressive. It's like 3 units total that are available right now. Next, there's been national chains opening branches in Littleton for the past decade with brands such as Home Depot, Lowe's, Starbucks, TJ Maxx, Urgent Care, just to name a few. Now, these locations bring jobs for one, but also these companies spend a lot of resources to determine expansion opportunities. So it's typically a really good sign for the real estate market if you see these stores moving in. All right, so now let's count it up. We have verified rental demand, positive population and economic growth, and very little new inventory. So you start to get the picture why this little market may be worth investing in. So what's it like to actually buy something here? Well, just like everywhere now, it's really hard. Like the lack of inventory, while it helps with rental demand and prices, it makes it so hard to find something that's even for sale, let alone a good investment. But if the opportunity presents itself, the pricing is extremely attractive. Just one example here is this 11 unit. It sold for $600,000. Each apartment rents are probably $800 a month on the lower end. So you get gross income at $8,800. Commercial mortgage on this would be about $4,367 a month, and that's at 7%, 20% down, 25-year amortization with taxes and insurance included. Add in another $1,000 a month for maintenance and operating expenses, and you're left with about $3,400 a month in cash flow, or about $40,000 a year, which comes out to a 1-year ROI of 34%, which is just unheard of in most markets now. And I know this is just a back of the envelope analysis. Like, I don't know if this building needed a lot of work or had any other issues, but there's certainly still a lot of padding in those numbers if it did. And this is kind of indicative of the market as a whole up there. No matter where you are, this market's not easy. But I'd rather be trying to find deals where I know the numbers make sense as opposed to spinning my wheels in an uninvestable, high-price market, at least until there's some sort of shift in the market as a whole. Now, how can you identify an emerging market like Littleton in your area? My number one piece of advice is to use your competitive advantage of living in the area to listen and ask friends, family, coworkers, whoever, where they're living, where they're thinking of moving, what their neighbors are up to. People love to chat about this stuff, and as benign as you think it is, this information could be pure gold. Think of it this way. If I live in Albuquerque, New Mexico, but I'm trying to invest in Trenton, New Jersey, how many people in my area will have knowledge about that? Probably none. On the other hand, if I'm looking to invest in Santa Fe or Phoenix or some other local market, probably everyone I talk to will know something about the surrounding area or have an opinion about it. Next, bring up that market on Zillow and roughly determine its affordability, kind of like I just did for that property in Littleton. If things look appealing and fit your buying criteria, continue to use that competitive advantage of being close by. Drive to the towns you're hearing about, spend a day there, spend a week there, talk to locals, talk to brokers, drive the neighborhoods, etc., etc. Use this all to get a sense of the vibe or the buzz and try to figure out if what you've been hearing has some truth to it. If it passes all these tests, then really start to dig in and think about putting offers in. So let's bring this full circle.
Did I not clearly explain the circle of trust to you, Greg?
As I mentioned earlier, I have a strong belief that buyers will continue to push out of high-priced markets to more affordable but relatively close alternatives. Are they going to Littleton? I don't know. But if you can identify some smaller cities with similar metrics, you may be able to capitalize on a strong local economy with some new buyers seeking affordability. And it's not easy, it's not sexy, but for buy and hold investors, it's the only way I'm making the numbers work. Like, it could just be my market or my region, but I hope this was helpful for all you investors out there feeling stuck that maybe need a fresh take on things. So I'm Tyler, founder of Wealthy REI, where our goal is to teach buy and hold real estate investing to new and existing investors. So definitely subscribe to the channel if you're interested in that kind of stuff. If you have any burning questions or you want me to cover any real estate topics, feel free to drop a note in the comments and I'll try to get back to you. So thanks for watching, and I hope to see you next video.